So, Laura, you just alluded to another central bank who's doing a demand-driven system, although their spread is much smaller. And so it is interesting to see this general movement among many central banks. I think the ECB counts, the Bank of England, Bank of Canada to some extent, so the RBA. Here's my question. How did this all start? It's almost like this movement is happening, right? I mean, obvious answer would be, well, QE, how do we deal with QE? But how do they all kind of land on a similar, journey? Now, again, differences, but what do you think? Why did they all want to go to a demand-driven ceiling?
I think the biggest motivation for switching to a demand-driven ceiling system is that during the country's experience with the floor system, they found out that the demand for reserves is highly uncertain, it's difficult to estimate, and you can run up against the steep part of the demand curve without knowing that it's going to happen. So I think when I was at the RBA, the story of the Fed in September 2019 was repeated often as a cautionary tale for other central banks. I think one of the important things to note in that discussion is that people were quite worried about the skewed distribution of reserves amongst banks. And I think that point is basically that even if have a large buffer above demand, it still might be the case, because the distribution of reserves is skewed, that some banks need to borrow in interbank markets to replenish their reserve levels. And when they try and do that, they're accessing a market that has largely withered as a result of a lack of activity. And it takes banks and other market participants a while to reboot those systems, to increase their credit limits with their counterparties, for example. And so even when the supply of reserves is above what you estimate, and maybe even at the top end of your range for where you think the demand for reserves is, you can still get volatility in money market rates or spikes in money market rates, which means that you lose control of your monetary policy. And I think that was the story that we told ourselves, was that we don't know where demand is. We think it's increased, and we don't want to experience this volatility that the Fed experienced in September of 2019. And so the demand-driven system solves this problem to some extent, because you allow banks to expand the supply of liquidity automatically when they need it. And I think that's the sense in which central banks have all decided to operate a demand-driven system, because I think this problem of estimating demand and demand shifting around over time is common to all of the jurisdictions.
Yeah, that is a profound point.